Hello everyone, today I will tell you what is Mirage setup, how you can use it on real graphics in order to open very good positions on the Forex market, on the cryptocurrency market. Yes, in principle it does not matter, it works on any market. Sit back, we are starting. Today we will talk about Mirage setup. This is my author's setup from my trading strategy Nightstar. It looks like this. That is, the price is moving. Now we will consider a long example. Yes, the price is moving up. And at the moment it falls here, removing this minimum. What is this minimum? This is an inducement for attracting people in the wrong direction. That is, when it is removed, it confirms here, in fact, the top point, this maximum. But most traders think that there is a break in the structure and begin to sell some imbalance here, yes, or an order block, or some zone of interest, or about 0.5 of this range. But in fact, a completely different thing happens. That is, when this inducement is removed, we have the first wave of sales, namely, an involvement in the sale. After that, there is a small correction, just a test of the imbalance. Most people enter the position of sale here, in this way, all retail traders, the masses of the market. And the price continues to move down, another wave of sales passes to attract people in the wrong direction. After that, as a rule, there is either some kind of trading, after which the price goes up. But as a rule, I like setups that absorb some candle here, retest it, and go further up, updating this maximum and confirming this minimum. You ask, and how will we understand when the price really turns around, when we have a change of trend? Because, in fact, if there is no break in the downward direction, how will the price then turn down and fall here? Everything is very simple. We will wait for the break of the confirmed minimum, which was confirmed here. After the price here forms a new maximum, a new point of oscillation from above, after the removal of the inducement, it can either continue to move up, or here, for example, break through some order block. That is, forming a flip module and turning down, reaching this minimum. That is, either here we can buy, open a long position, earn a very good take, or the price of this position breaks through, that is, it goes down. And here, after the removal of the inducement, after the absorption, we can already open a position for sale to this minimum in advance, before the break of the true structure. Here we also open positions according to the trend, using this Mirage stop. Also, it can be used with divergence. That is, here, for example, the minimums are not updated. Here they are updated. It can also be used with correlating assets, for example, the pound, the euro, the dollar, and so on. Here is a real example. This is the pound. This is the M2 time frame. This works on any time frame, that is, the formation of a structure and confirmation of points of oscillation. That is, we see a rising movement here, and we must find a maximum, the nearest new one. That is, we have, for example, a menu of this impulse, from which this movement began. We must find a new maximum for it in order to confirm the range, and we can trade. This maximum is confirmed in this place because the price removes this inducement here, makes a boss, and confirms this minimum. But pay attention. This impulse from this minimum to this maximum is not traded, so this minimum will be weak. Here we are looking for a new maximum, which is confirmed here because the price removes the inducement, makes a new boss, confirming this minimum. We reach the grid. We see that 0.5 is also not traded. That is, these minimums are very liquid and weak, and their updates will not take into account the true breaking of the structure. Next, we confirm this maximum in this place, because the price goes down and confirms this maximum by removing this inducement. This inducement is very close to these minimums, so they are relatively equal, and this is all one liquidity that the price removes. We see the removal of the inducement here. The first wave of sales is in this place, for involving people in the wrong direction. Adjustment and the second wave of sales. That is, most people opened in this place, with a stop loss for this maximum and take profit, for example, here. And the rest of the mass of people opened in this place at this adjustment, because they thought that the impulse would continue. They also sold here. That is, there is a buyer and a seller in the market, and if the sellers sell, then we see the corresponding adjustment down. That is, they sold here, 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 and here. People tried to push the price down because they thought that the structure was breaking. But no, this is not the structure breaking, this is the removal of the inducement, confirmation of this maximum. Here we reach a quarter to a new maximum. We see that 0.5 of the range is taken from us, that is, we already have an effective range here. From this minimum to this maximum. These are all liquidity points, and in this place, we see that we have an order block. Liquidity of the past candle is taken from us. We can allocate this zone as an interest zone. But it did not reach us, because we can allocate it with an imbalance. It touches us, and in this place we can open a position for purchase. After absorbing this candle, we allocate this single candle block. And from it we enter the purchase. To update this maximum, we could also gain a position in this place. The price removes the inducement. There was no removal of the inducement here, because our impulse is not complete here. And it should be complete. Do you understand? The price removes this inducement, makes an investment in the sale of this impulse, confirms the secondary maximum. Although no, this was the confirmed main maximum, although it is not confirmed here, because the price made the boss a shadow, or a body. Yes, he was a body here. Here we confirm a new minimum. Here is a new maximum. And we see that the price removes this liquidity. This is extreme liquidity. After that, we can clamp the position in the purchase. With a take profit of 1.5. Next, we see that the price here confirms the new maximum. More precisely, here we had a boss, and the confirmation of a new minimum. A new maximum is confirmed here. The price goes down and removes this inducement. There was no removal of the inducement here, because, again, we have an incorrect adjustment here. The price removes this inducement, confirms this maximum. After that, it is removed. We see that the price here is in the second quarter. This minimum is protected, because here he did not remove a full return. This is also one of the elements of my strategy. After that, I see here the absorption of this bite candle, which made a bite in this place. This is a separate element from my trading strategy. Very important. After that, we see the absorption through the inner bar. Its retest, and entering the position with a stop loss for this zone and a take profit of 1 to 5 R. We will see later the update of this maximum and confirmation of this minimum. That is, this is how the classic structure of my trading strategy looks with the use of a Mirage setup. Thank you all for watching. Promote this video in the recommendations, like it, share it with your friends. Please promote my channel. Bye everyone.